For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
Hey, Traders Mindset Reset Thursday, day 2, Free Cash Thursday, day 2 on the backside of the week. Today, Mindset Reset, we'll focus on some questions, group of questions that have come up from different traders. We'll talk about generally mindset. Today is going to be hopefully dive deep into just some very simple, hardcore understandings to crystallize what it is that you're actually trying to accomplish when you go to the screen. One of the things that traders struggle with, I made a post today saying that, one gentleman asked, well, if 90% of traders lose money, then, why does traders need to get your course to make a difference? And you don't need to get my course to make a difference. You can trade anything that you want. As I've mentioned, the setups in the playbook and the ACB masterclass have come from my own school of hard knocks learning through doing everything wrong repeatedly over years and making the same mistakes over and over and over again. Even though I had learned a lot, I had been trained by some of the best educators and trainers in the industry in Australia. I've talked about Peter Brandt, Brian Costello, Brent Penfold, just to name a few. Some very successful traders, but they also empowered me with some very simple concepts that it took me years to get through a quarter-inch of skull, because I would repeat the same mistakes over and over again. Bad behavior, impulsive, irrational, emotional, frustration, impatience, over-leveraging, random impulsive trades, no edge in the market, all these things that cause traders to, over time, consistently lose money even when they do some things right. So traders want to watch all the time. They want to watch live trading. And I know that that's a myth, because you'll watch one particular trade, which may be in any session and not even a setup, and people are watching live channels because those are traders that are trading the markets. Now, what I'm doing is looking for the same rinse and repeat setups. Now, I've talked about this specifically ad nauseum, especially with looking for specific trades on a Thursday. I talked about putting together one simple trade for my sons, only looking for one simple trade, the same setup over and over and over again. Now, let me say this. I've put those 2 hand drawings up, dump, coil, and pump, pump, coil, and dump. If I find those on any other day, that's a bonus. But Tuesday's the front side and it's day 2, and it typically expands the range. If we get a day 1 runner on a Monday, then we might get a reversal trade on day 2, but it might happen in Asia. It might happen in London. So when I come to the screen, that setup isn't there. The same setups show up every single week on those days of the weeks. It's whether or not the opportunity shows up in your session on the instruments in your basket. Now, this is where traders get all muffled up with garbage and junk and rubbish. Number one, they're looking to take trades. So let me differentiate what taking trades are versus hunting scalable, repeatable setups. Scalable, repeatable setups are the ones you're hunting if you want to significantly compound your account. We talked about this. 5-to-1 asymmetrical risk reward, 10-to-1 asymmetrical risk reward. The DAX is a great example today. One trader said, well, it all looks good in hindsight. It's week 3. It's day 2 on the backside, the high of the month, a first red day signal. If you don't have a clue what you're hunting, that means you're still going there every day looking for trades, soups, gaps, sweeps, liquidity runs, arrays, premiums, discounts, pushes. One trader asked today, why don't you talk about round numbers anymore? Well, let me clarify. Round numbers on instruments are price levels, and on indexes and other instruments, they're the level. They're levels. They're significant, but only if you have a setup. But I don't trade off the numbers unless it aligns with the setup in the session that I'm trading. Those are important because obviously in most cases, major round numbers, 50s, double zeros, will be levels, but only when they align with the setup. That's a secondary factor on the chart. Now, another excellent question that I received today, if you have two of the same instruments, euro pound, that show up on your watch list, they both move similar, which one do you choose? Now, here's the thing, I've talked about this with the currencies. For example, we could have first red day signal. The pound had major red news today. Very rarely will they set up exactly the same. But if they do, as I've said before, pick one and forget about everything else. Focus on trading that instrument, executing as flawlessly as possible. It's all, you can make it as simple and as complicated as you want. I just pick one. And if another one moves better, so be it. What could I learn from that maybe would have helped me identify, or even not even worry about it? Execute the trade, entry, stop loss, take profit level, and walk away. So next question regarding an instrument today, we had several low-hanging fruit continuations into the U.S. window. A couple traders held on to them, got stopped out of break even. Whenever you're in a low-hanging fruit situation heading into an important timing window, so you're either going to get major red news or the New York Open. Now, New York Open on certain instruments can be an explosive 9:30 New York time, can be an explosive time. So if you're already in an existing market, either extracting off the bulk of a position and having a stop loss in place in case there is a violent reversal or spike or whatever, or just taking the money and then reassessing once the New York market opens. Now, we had explosive short squeezes today. Congratulations to the traders that executed on those trades. A fantastic opportunity. So this comes to the next point. It's day two on the backside. We had markets that moved in earlier sessions significantly, U.S. indexes. So if that's not your session and it's already moved, we have a couple scenarios. Number one, there's a possible reversal setup, low of the week, day two. So we had FOMC that forms a U.S. session low on indexes where we had levels drawn across. Same thing with oil, a U.S. session low after FOMC. Markets that when they trade to those levels, how does price behave? What time is it? How does price behave? Now, here's the thing. If it's not your setup, don't worry about trying to trade it. So another comment from a trader is, what setup is that? How would I have gotten that? So here's what I want you to focus on. What setup are you looking for? Don't worry about what setup it is if it's not yours. If you want to learn that setup, then understand what that setup was and then master that setup. Don't think that you've missed out. If that's not your setup, that's what I'm really trying to hammer home today. I keep repeating that. What setup are you looking for? I'm looking for the exact same setup every single day, whether it's long or short. It's a bonus if it shows up on other days, but I'm looking for coiled markets. And I'm looking for monkey hammer or ACBs. When I get a coiled market, it's an ACB in most cases if it's a U.S. session trade. So that comes to the next point. When traders get a trade that coils in an Asian session or London session, there is a possibility that those can still come back. They're MCBs because they move in earlier sessions. If it's a 3-session coil, London, New York, Asia, and it goes on a range expansion front side or a range reversal backside, then that's something the trader has to know in terms of either holding or leaving a trailer. But any evidence when I get a new timing window with a new session, if there's major red news or if there's evidence of a reversal, lock in the money. The whole point of any of these trades is to get paid. Now, I want to emphasize something that I need traders to think about if they're serious about, really serious about growing their trading business. Growing your trading business. Think about that. You're managing a basket of capital. You're trying to grow your trading business. Catching moves and grabbing arrays and swings and pushes and levels and doing all this little minutia is not significantly scalable. So when I say keep it simple, I cannot emphasize to you enough to step back and have a think about what you're trying to accomplish. When we get large moves that are coiled, front side or back side, those are scalable setups. Catching highs, catching lows. I grabbed the low. I caught this. I caught that. When you use language like caught, that means it was luck. If you're using the language, I caught that move, that's luck. If you're executing a setup from your business, your trading business manual, your playbook manual that is scalable, whether it's for a session trade or even with a nail and bail, like I talked about, this nail and bail on indexes are 100 pips minimum. A 200 pip is usually a range expansion on an index. We're not talking about monkey hammers, but 100 pips is typically a stop hunt. If it's a reversal or an expansion, it will usually be at least 200. Question trader asked about the ACB masterclass, not knowing whether to use the 1 minute or the 5 minute. There is no 1 minute charts anywhere in the ACB masterclass. Now, if you get really, really good at that and you want to go down to the smaller time frame, it's not necessary because that setup is based on the coil. And once the coil is there in the timing window, it doesn't matter which little candle you get in on. Entry, stop loss, and hold till close. If it's not an ACB and it's a nail and bail or a session trade, lock in the money. So something to think about if you're struggling or if you're sort of on the cusp of getting things, or if you're on the sidelines going, oh yeah, it looks great in hindsight. Let's, there's 1,000 live channels, but here's the thing. We're not trying to trade markets. If it looks good in hindsight, I want you to think about this. What led to that market setting up on the day? What would have given you a signal for that instrument on your watch list heading into today's session, whatever session you're trading? Instrument comes up on your watch list, you're trading Asia, no setup. Instrument shows up on your watch list, Asia sets up into London, US, Asia, London for a parabolic, scalable, all-in opportunity for the DAX traders today. Awesome job. Congratulations. The DAX has given those traders in the last month some monsters. Same setup, different weeks, same coil for a scalable, rinse and repeat 10-star opportunity. Okay, shows up on my watch list. I come into my New York window. Oh, shoot, it already moved. London got the trade. Bummer. Who cares? It's the same setup. It just moved in an earlier session. Well, no wonder. It's a European index. So if it looks good in hindsight, what can you learn from that? Because I don't know how many times the same traders ask the same question every month. Well, it looks good in hindsight. How did you see that? It's the same setup. It's the same setup. Week 1, week 2, week 3. It could be week 2 next month. It's the same setup. But my point is this. If it looks great in hindsight, what can you learn from that setup? Now, does it show up on other instruments? What would lead you to get a signal from that market to put it on your watch list if it shows up again? And what do you need to see for that instrument to set up the same way into the session that you're trading when it shows up next time? Any instrument. And when that penny drops, you'll stop sitting on the sidelines going, oh, it looks good in hindsight. That, to me, is one of the problems with the behavior of the trader. They're doing the same thing over and over again, but they're expecting a different result. And we all know what that is. That's called insanity. So, mindset reset is to get your head right and then fix that and then transform it into an actionable review process. What do I need to do action-wise tomorrow, next week, next month, rinse and repeat 1% better every single day so that when it shows up next time, number one, I know how to bring it up on my watch list. Number two, how I'm going to execute it if it sets up into my session, and how to recognize, number three, if there's no setup, not do anything, or if it's not set up into my session, and learn to go to the next chart that's on your watch list. Otherwise, you'll engage in impatience, impulsive, irrational, emotional, and degenerate random trading behavior. And that's not a setup. That's a trader trying to take a trade. And that's the type of behavior that can put a trader on tilt. They see other people posting their results, or they got stress, they got pressure, they hate their job, they got in a fight with their spouse. They see other traders in the community posting trades from the earlier session and they killed it. So these are the types of things that, okay, now I'll say this in closing. When you go to the screen, if you've got one or two instruments and you're going to go with one, or you got a couple and you're going to trade both, whatever, shut everything else off. Watching cannot fix bad process, bad attitude, bad behavior, emotional behavior, impulsive behavior, irrational behavior, degenerate, junky, gambling behavior. The only thing that can fix that is the trader themselves. So if you're looking for one particular setup, number one, that removes a lot of the stress, anxiety, emotion, impatience. You either got a setup or you don't. If Tuesday's day two and Thursday's day two, is it possible I could look for the same setups on day two? Doesn't matter if it's front side or back side, long or short. It's not a 3-day cycle. It's not a gap. It's not a sweep. It's not an array. It's not a discount, a premium, supply, demand. It's a setup. Same setup, rinse and repeat over and over and over again, no matter what instrument I'm looking for. And if I don't see it, guess what? I might have a nail and bail, maybe gold. My go-to always for simple nail and bails is usually gold or the index. 9:30, New York Open, 10 a.m. club. Depending on what day of the week it is, I'm just looking for one or two. Keep it simple. If I don't see it, I'm not messing around. I'm not sitting around for 5 hours. I could care less. I either get rinse and repeat scalable or a nail and bail, and then I'm gone. I'm not there to play games. If it's not rinse and repeat, I'm not touching it. If we have major red news, if it's an FOMC day, well, guess what? They'll maybe get a nail and bail. Otherwise, I'm not interested in FOMC. I know it's tradable, but I'm just not interested. I'm not going to come back. I'll see you the next day. We talked about this in the playbook, second day trades. And lo and behold, today was a monster for several traders after FOMC on the back side of the week. We repeat the same things over and over again because the same things repeat over and over again. The number one thing that will cause a trader to not get the results that they're after is the trader themselves. Get that process fine-tuned, get your brain fine-tuned, get your mindset fine-tuned, get your daily routine fine-tuned, your workspace fine-tuned, get crystallized on one or two setups. One or two. My friend Steven, talk about this all the time, trades reversals, third hour can be from 9:50 on. Lo and behold, if he doesn't see it, he doesn't mess around. When he sees it, he nails the trade, one and done. If we get a monkey hammer, then we're going all in, kitchen sink. It is what it is. That's markets. That's trading, discretionary trading. Okay. If you want to trade the markets, it's the wrong place to be. I'm only interested in 90-10. 90-10. If you don't know what a 90-10 is, go back. We cover this there's so many videos, the same setups over and over again. First red day, whole playlist on that. First green day, a whole playlist on that. Gold. Pump and dumps, dump and pumps, same setups over and over and over again. Keep it simple. It's that simple. And if it was that simple, everybody be doing it? No, they don't, because traders can't change their behavior. They can't. They got to trade markets all the time. That's the whole point. The trader's the enemy. The market does the same thing every week. Traders there's two types of traders: the ones that get it and the ones that want to trade. It's your choice. You can do whatever you want. I know people don't like my opinions. They don't like my attitude. It doesn't matter to me. I'm still going to do rinse and repeat next week. The same thing. Let the smart people and the geniuses take trades and show you how to trade markets. I want scalable 90-10 opportunities. When markets coil, they go on range expansions or range reversals. And if we get a monkey hammer or an ACB, they're not coming back. They're going to wipe it all out. That's what I'm hunting. That's my little 2 cents for today, traders. Congratulations on a great week. Love you. I appreciate all the feedback. It's challenging for some people. And if I'm hard, if I'm straight to the point and you don't like it, well, so what? You're not here to be my friend. You're here because you want to be a better trader. And I'm not going to sugarcoat anything. It is what it is. These are the facts. These are the facts and the hard truths of trading. You can make it as simple or as complicated as you want. It's your choice. Paul Tudor Jones. Okay? Make trading a pursuit of pleasure. I'm making it a pursuit of pleasure and a highly profitable one. Have a great day, traders, and may the markets go with you.